Hello, it is the 28th of September 2012. It's a Friday. This is the end of the day, the week, the month, and the quarter. And for the month, gold gained 4.75% for the second consecutive month in a row. The Fibonacci retracement has a 76.4 and 85.4%. Normally 38.2 and the 61.8, but man, this thing is in such a massive uptrend that when that's the case, you don't expect bigger pullbacks, and it doesn't even look like we're going to get the 85.4, which works out to be that of a 14.6 correction from that of the 2000 lows of 252. What I like about this chart, after having the correctionary phase in 2008, several months of staying within this 18 band in an uptrend, to have a few months correcting, going sideways, and now noticing that we closed the month above this 18 average of highs, which has flattened out. It would be nice to see confirmation for the next month. Now, normally October isn't the greatest for precious metals. We're going to take a look at silver on the ember months at the end of this video. But I do like how it is correcting through, and when it's breaking past this, you got to think, well, what's the chances it's going to continue the pattern of higher highs and higher lows merely just by looking at this? And then you throw in the fundamentals of the fiat currency creations, as well as people be informed of the biggest fraud that this planet has ever seen, in my opinion. Okay, so that's gold. So gold gained 4.75. Silver this month gained 8.73 after it had a gain of 13.3% the month before. A little bit different of a pattern that gold has. We're going back to the same lows. 405 is the same as the 252, basically lows from the start of the millennium, and we have a 23.6% correction, and gold can't even get 15. It's a more volatile market, silver is, and very similar patterns. A long while ago I was talking about this a symmetrical triangle with the line as you see it in that downtrend. Well, just like gold breaking out above the average, we have a clear break above it. Let's see how the next month does after. Same thing as we see in the monthly chart fundamentals, exactly the same as it is with gold. As far as the quarter for silver is concerned, it gained 25.5%. So pretty decent sized gain. Now what we're going to figure out in just a few moments is how many times has silver gained greater than 25% within the quarter. Before we do that, we'll just quickly take a look at the basic uptrend line, and it has not broken anytime soon yet, or any time lately. It has not broken. When it has, you've got these little pierces below, but it's in an obvious uptrend. So let's take a look now and see how many times we've had a 25% quarter. This is the data for silver on each quarter. So to figure out what the gain is, you take the close and you subtract the previous close and divide it by that number there. That's where the 25% comes into play. We'll put this into a percent. And then we're going to find out how many times. So I can just ask the question, okay, are you greater than 0.25? If so, give me a 1. If not, put a 0 in. We'll copy and paste this all the way to the top. And then we'll find out in just a couple of seconds how many times it has 10. This is the 10th time silver has had a 25% gain. So other times we're going back to December the 31st, 2010, a 42% gain. And just to make it easier to read, I am going to go like that, just so all these zeros will be gone. Okay, so we have the first one since 1968, occurred in 1974. That was the first quarter gaining 64%. 2 quarters in a row in 1979, each pretty much close to a doubling or 100%. So it started off the end of summer at $8.53, and then it ended the year at $32.30 or $32.20. Yeah, normal trading. Again, 2 quarters in a row. Again, it was the final 2 quarters of the year that gained 43% and 33%. The 1993, it had a 25% gain. We had 33% in 2004, 30% in 2006, and then there we have it. So those are the percentage gains on silver, just going back to some historical data. Moving on, let's take a look at silver on the weekly chart. Same thing, pretty much. You're at this significant level. Now, what would be ideal for the Fibonacci analysis is for this to continue holding for a decent amount of time, or just have some sort of nice little pattern that can establish a resistance point. We've already established 35. And then on a situation where maybe it has a nice clear break, let me give you an example of such, where you do something in the area of like that, and then you have that nice clear break, and then you know it's almost a definite that you're going to come up to this line, and your risk reward can be very much amazing at that. I also like the fact that it has pretty much had double support at this level. On to the daily chart now. And the daily chart is continuing to go sideways within this, after this uptrend that we've been seeing. And I'm still shocked that we didn't have this big up day 2 weeks ago after the day of the Fed stating QE3 is in the works. But just like we've seen with the gold monthly chart, you have your uptrend, you're back into this band, and when you start to leave the band, that's when it's really going to be looking good and most likely having a new leg higher, probably in the 36, 37 level. Earlier today, I talked about the 2-hour time frame. This is the 2-hour chart again. So it's been just chopping around within this. If this does it for a while, you could just get further more into this choppy mess, which would just be more of this sideways consolidation that's taken place. And now you're seeing a whole bunch of possible fail moves that can come in, which is what you'll always see in choppy markets. Here's a spot where it broke down below it, and it's now found resistance at it. At least that's where it closed the end of the day. Basically, what this means is this is point A to point B, and it's now trying to consolidate in here, stating, yep, the selling from here to here is a failure. So we go back again to the daily chart. What we're looking at is we're looking from point A to point B within this, of course, sideways movement. Okay, moving on, let's take a look at a stock. This is via request. A couple of weeks ago, I was asked about SVM, which is a silver mining stock. This is the Toronto one, although this is also traded on the New York Stock Exchange, or whatever, S&P, however, whatever index it happens to be in. So with that being said, obvious downtrend that was coming into play, and this was the first key level that I'd be stating, okay, you may want to think that there's a decent chance that this is where it may bottom. So a few questions were asked. One, how's it looking from the point of, since the QE, as well as some basic Fibonacci levels. I'm asked about Fibonacci about other sites. Now here's the significant thing. When your move from point A to point B is large, and point A will always be, in this case, defined as top, and point B is the bottom, and it's A divided by B. So in this case, if I take 1535 and I divide 1.12, I'm going to get a number around 1314, which is a very large number. So if you use exponential Fibonacci or linear Fibonacci, you'll get a much different result, because within exponential Fibonacci, you're going to have the top one somewhere around here and the bottom one somewhere in here. It's pretty bad. Whereas on short-term charts, it really makes no difference whatsoever. And we're going to take a look at this on the 4-hour chart. So since what we're looking at is we're going to focus on this bottom and how it's reacted since its bottom. Then we're going to actually have some volume on this as well. This is this is a Toronto volume of SVM. And I'm not a huge fan of volume, but I tell you one way where I really like it, especially when you're looking at the 1-minute time frames or daily charts for big volume to talk about tops and bottoms, is if we take the volume from this big volume in here, that matches up with the selling that occurred that right now is the bottom. There's been much larger volume on the rally that's been coming into play, and as far as the entire duration of this downtrend, this has all come on lighter volume anyway. But when you see stuff like that, that can be, hey, wait a second here, I see this big push here, you notice you're in here, you're at 510 or whatever, I think this is a bottom because of the volume. And a lot of times you might be right, and in this case you would be. Now something you still got to watch out for is that, well, maybe there's going to be even larger volume that surpasses this. That will be another down move, and most likely a larger size candle than that. It's also good to see, say for example, 1-minute time frame, and assume that you go up to, say, 7:30 on a situation like this, or whatever. These numbers are useless, really. But let's just assume you go up here, up nice little gate, and then the volume is just starting to surge, and you're seeing this on the 1-minute time frame. When I'm seeing stuff like that, that might be telling me, okay, wait a second, maybe we'll be topping for a decent amount of time. And that's generally how I perceive the volume. Now, as far as the chart itself is concerned, since the QE, it's up, like, it's pretty much breaking even since I did this chart the last time. But you got point A, you got point B, and it's starting to become a little bit of a choppy mess. You didn't make a higher low from this point in here, but you are still holding above this significant level, and it did rally pretty decent actually, because just like silver, where it's above the 61.8% from its most recent high or low, well, this one is as well. So that's very much a beneficial thing. And also what I noticed too is this: when you have a bearish candle, say something like this, and it doesn't follow through with much downside action, or the downside action gets quickly recovered back to its previous level or higher, then that can oftentimes mean, hey, wait a second, this should have had further decline, at least down to maybe 610 or 615 or something. And that didn't occur, and you start to see it going higher. Then that can be an alert sign saying that the bull market's ready to go, and it's probably going to break past this high and get going. Now, as far as levels 4 concern, as long as it stays, it holds above this this bottom one here at 551, then things will be going pretty good for it, as that'll still say that the rally so far since this bottom has not failed. And finally, let's look at the embers, as I was talking about. And we'll start off within the month we just had, which was September. So these are all of the Septembers that have occurred since 1968. So every one of these starts at a value of 1. Therefore, if a value is at 80, it's down 20% since then, or 0.8, I should say. When you see it at 2, that means it has doubled or up 100%. If it's at 1.4, it's up 40%, and so on. 1979 seen gains of 57.4%, with 27.7% in 1980. Last year in 2011, the drop was over 27%, with most of the losses coming over very few hours in the last couple trading days of the month. The overall net gains as of the second last day of the trading month of September 12th, which pretty much is the same, shows overall gains of 178% only in the month of September. As far as October is concerned, which is the month we're getting into, as I stated at the start of this, it hasn't been a good month, but the last two most certainly has been. October has been a bad month for silver, with the price losing 27.2% overall, or holding 72.8% of its gains, or value, because there really hasn't been gains. In 2010 and 2011, there were gains of over 12% in each month. So we've had 2 consecutive Octobers with gains of 12.5%. So you can go on and say, oh, it's a bad month, it's a bad month. Yeah, most of the time it is, but that doesn't mean all of the times that it will be. The worst 2 months occurred in 1983 and 2008, losing 22.1% and 19.1%, respectively. November's a good month, actually. Let's bring in November. There we go. Silver monthly gains for this month. Since 2003, silver has had good gains in November, with 13.2% and 14.7% gains in 2009 and 2010. From 1968 to 2002, over a 34-year period, there were no long-term gains with silver, and was down over 15% by the end of 2002. 47.9% are the overall net gains for this month. So this is what you call choppy sideways action with a breakout, but as if many people are looking at only what the November charts are looking at and saying, this November, and especially this one, hey, it's breaking into the November range, maybe we should continue buying. No. And finally, December, which is all the embers, I guess you can say. December has been a decent month, but it's kind of interesting. You look at this, and then you look at that. The gains for 1979 were that of 69.5%. We've already seen how we had 2 quarters that doubled, so that's part of that doubling. For the month, it took nearly a decade and a half for December's to give back the large gain. It took over a decade to get the same gains back. And it's been doing a whole bunch of nothing for the last so many years, and that is for December. Thank you for tuning in. I'm probably not going to do any more chart videos this weekend. That'll be it. If I figure something else out, then maybe I'll do something. Or if there's still an extra request that comes in that I can do, then I might do that as well. I'll probably still end up doing something or some stuff. Maybe go over a few different articles or anything else that may hit the news. Of course, no guarantees on that as well either. Thank you for tuning in, and have yourself a great weekend. Take care.